Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 2nd of September. I'm Daniel Lam, your host for the podcast. Our latest global market outlook publication has downgraded global equities to neutral, an asset class which we've been overweight for most of 2024. Now, this is not so much about worrying over a US recession. Yes, we have seen another one of our recession triggers linked to the labor market breached in the last month. Now, despite this, we maintain our central scenario for US soft landing and only a 20% probability of a US recession over the next 12 months. Why is that? Well, the weakness in the labor market is not just all about falling demand. There's also been rising supply in the form of increased immigration. Now, falling demand, of course, is negative for the economy because it suggests that the economy is weakening and business leaders are getting a bit more cautious. But increasing labor supply is good for the economy as it increases the pace at which the economy can grow without generating inflationary pressures. So on balance, we see increased labor supply together with easing financial conditions as central banks ease policies, allowing the economy to experience a soft landing. So now you're going to ask, why are we downgrading equities to a neutral then? Well, that's because we believe the markets is already pricing in for a soft landing and cash holdings looks to be relatively low, even though global investors seem to have raised cash holdings slightly. This suggests possible further volatility episodes. Now, one key driver is the US elections. Well, I'm sure that the picture of Trump holding his fist up in front of the US flag is still fresh in everyone's mind. Well, back then, most pundits would say that Trump has the US presidency, quote-unquote, in his bag. But not so sure now, as Harris's entry has made the race a lot tighter. So this increases the chances of a Democratic president victory, but also reduces the likelihood of a Republican clean sweep. Now, as we argued last month, a Trump victory with a split Congress would likely to be the most challenging backdrop for equity markets, as you will get the negative impact from aggressive trade policies, but without the positives from lower tax rates. So if this scenario comes back into play, it could raise market concerns. Geopolitics is the other area at question here. The recent sustained Ukrainian incursions into Russia could raise concerns about a step change in Russia's response. Now, elsewhere, the risk of an escalation in the Middle East conflict could place further upward pressure on oil prices and potentially threatening the soft landing scenario. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.